Hi everyone, so I'm out and about, it's an early September day, and I'm going to answer some questions about Transform Global, the broad vision for Transform Global, and then give you a few little shots of London where I am right now. So how much are we raising? Well, we're raising 2.35 million sterling right now in impact equity investment. That will buy equity in Transform Global Limited, but it will also provide fund units or equity in the actual fund itself as well. It's designed that way because the vision is to have both Transform Global and the SDG 360 Game Changer Fund, and both being equity vehicles. Actually, the vision for Transform Global itself is to raise up to £4 billion sterling, up to and including the IPO. So the strategy basically is to raise that initial 2.35 million sterling, followed by some grant and donor funding potentially to support the technology build that is the investment system that will help us essentially scale. It's what we call an augmented intelligence decision support engine. And this will be open source, so we'll make it available to other impact investors that actually fit the business model design. We don't want to hold on to everything, we want to pass this out to the world. So that design, including the butterfly basket portfolio structure, which we'll explain separately, we'll be building and offering out to the world. So that initial money, we believe, will be around about 10 million of equity and grant funding. It's designed to very quickly lead to a further £40 million investment round, equity investment round, which is essentially the optimum launch round for Transform Global. In fact, what we're doing first of all is launching its subsidiary businesses. One is funding the globalgoals.tv, which we've already talked about. It's the vision for a mini Bloomberg or a CNBC, our multi-format media platform to shine a spotlight and educate and inform people about the Sustainable Development Goals and funding, every form of funding the global goals. And then separately, bigcrowd.net, which is the crowdfunding and collaboration platform that's really designed to help find game-changing projects all over the world, and with the support of the crowd, to support them both financially and with organized and thorough help and support, and especially with the spotlight that will be delivered through fundingtheglobalgoals.tv. So why are these parts relevant for a bank, you might ask? Well, very simply, we think it's truly important to build a very big audience and to control the content, the output, in a way that, frankly, we know that we wouldn't have if we were reliant on mainstream media. So basically, by building our own platform, that of course will syndicate content and will work with mainstream media, we're not reliant on them to really drive and underpin the kind of financial innovation that the world really needs. So going back to the investment that we're raising, that initial 50 million, so 2.35 of equity, followed by some grant and donor money, followed by a further 40 million of equity round, that's designed to do everything necessary to put in place the talent and the people to really build out the bank and to raise the rest of the equity that we will require to fulfill this vision at scale and speed. However, if the ultimate goal is not possible, that initial 50 million of equity and grant or donor money is enough to build a strong business in any event through the media property and through through bigcrowd.net. So that essentially is an underpinning platform, and everything else can be built out from there. However, we don't want to wait. So the goal is, as we are launching and rolling out fundingtheglobalgoals.tv and bigcrowd.net, we will be simultaneously doing the follow-on fundraise. The follow-on fundraise would be a 300 million combined raise. That's equity, 90 of equity for Transform Global, and 210 of a pre-commitment to the SDG 360 Game Changer Fund. Then, that 90 of additional equity to build and scale what we've put in place and to position for the full fundraise It also is designed to help us put in place partnerships with leading investment banks and leading parties that will be in the consulting and accountancy world, and also the legal profession, as well as key placement agents that are necessary to raise a 9 billion sterling fund. And that pre-commitment, part of that 300 million combined raise, because this is for equity in the fund vehicle at a discount to what the cornerstone investors would actually achieve, those who put up the 9 billion sterling, but for good reason at that discount, obviously because it makes everything possible. That 300 million raise is, as I said, 90 of equity to the bank for Transform Global and 210 of that pre-commitment. So those investors at that 300 million level, they will have both equity in Transform Global and equity in the SDG 360 Game Changer Fund. Well, you can hear a bit of noise behind me with the boats on the river and the birds that are tweeting up behind me, but hopefully you're still with me. So that 300 million raise, the 210, it's designed to be the success fee for the mainstream banks and placement agents and other parties who help us raise the 9 billion sterling fund. Now that fund, as we said, is designed to list, and of course, who is Steve Podmore? How can I think that I can do this on my own? Well, I don't think I can do it on my own, but I do believe that talent in the world, both mainstream talent as well as the emerging managers and a broad, diverse group of investment professionals and media and technology professionals and governance professionals can come together to deliver this. I've had many discussions over the last few years, but I've never seen the interest at the state that it's in right now. That said, we need the initial equity to get the ball rolling. So it is really about recruiting those personnel from a position of strength. But it's also about recognizing the massive need the governance of the world, governments and investors have to address these truly important issues that if we don't address, we really will not address the most critical risk and resilience threats to us all. So we have to. And we know that our existing investment vehicles, our banks and our fund structures and our platforms, they're really not fit for purpose. Now, they will play a role and they often will be partners with us in this vision. But ultimately, we believe the capacity building and early stage and other areas that the bank is designed to address means this is a very attractive proposition, and particularly through its diverse risk management strategy and its approach that will incorporate technology and media, it becomes a really compelling offering. And it's designed to work for governments, for sovereign wealth funds, and for mainstream institutional investors that ultimately give what they want, which is long-term, a long-term holding period, diverse risk management and intelligent risk management, healthy returns, their strategic issues being addressed, but also liquidity. And things like venture capital and private equity don't provide those. They don't provide actually the long-term holding period in most cases. There are some exceptions, listed vehicles primarily, and they don't provide what is really necessary, which is the early stage investment piece, is a combined, in a combined offering. So, as we said, the goal is to use that 210 million as a success fee for the raise of the fund. Now that means when the fund is raised, there is 9 billion, so it's 9 billion plus the 210, but the 210 is that success fee. There is a comprehensive presentation that explains how the fund will be raised, but I mentioned the goal is to raise up to 4 billion for the bank. So as you've already heard, there would be 50 million, then another 90 million, which brings another 140 essentially, potentially including some grant or equity investment, a grant or donor funding. However, that's a drop in the bucket at the 4 billion. So the other thing that is designed to be designed right from the get-go is the fund, when it is launched and when it closed, it will automatically make an investment of 360 million into Transform Global. And that means Transform Global will be fully capitalized with the money it needs to raise the fund and the infrastructure it needs to manage the fund. But not only that, the investors in the fund, they also benefit on the basis of the success of Transform Global that won't just manage the fund, it will do the other things as well that are all complementary. That is funding the globalgoals.tv, it's bigcrowd.net, and it's the many transactions and structures and impact investment and infrastructure investment mechanisms that the bank itself can put in place and deliver on. So these things are highly complementary. So what we realized, although the fund and the bank are technically separate, the bank will, with its subsidiary, manage the fund. So as I mentioned previously, the subsidiary is called the SDG 360 Fund Management, and that will be responsible for making the investment decisions. It will incorporate about 450 people around the world, and they will be doing the early, mid and late stage, as well as market-based impact investing. That will be done through third parties, but the direct investing will be done by personnel within the fund. So that's the subsidiary, but Transform Global itself will also have a significant role in managing that fund. It will provide investment banking support, infrastructure, technology, facilities, everything necessary to run something of this scale, because we also want it to be replicable. We want it to be able to be set up on a smaller or larger level in different parts of the world and for different themes and sub-themes of investment. Now, the SDG 360 Game Changer Fund obviously is all about addressing the SDGs in ways that are truly game-changing, that are scalable, innovative, complementary, and highly impactful. But we recognize that it won't, the world is a big world and we'll need many such funds. So by having the infrastructure and investment banking inside the umbrella, that means that fund can be best managed with the people who are responsible for making the investments on a daily basis, fully supported but focused on the business that they need to do, which is pretty innovative. And it's explained, as I said, in a separate video that has some graphics that explain the butterfly basket portfolio structure. The fund will actually make 4 types of investment. It will invest, as I said, into the bank itself, that 360 million round. It will also invest in what we term special opportunities. Some people might see that differently, but that's into other fund structures, other platforms at a GP or umbrella level, meaning we will invest in the equity to set up those new structures and really get them to scale in a way that is complementary with everything else that we're doing. In addition, the goal for the SDG 360 Game Changer Fund is to invest in what we call the butterfly basket portfolio structure of direct investments. And this is highly innovative. I just cannot express how exciting this part of our model is. And essentially, it's where we'll do a volume of early stage investments. Essentially, every investment cycle, it's designed to do 360 investments of £1 million, but they're made up of half of cash and half of organized help and support. So it's essentially designed to provide an awful lot of data, a lot more help and support, and it's designed essentially to help us decide which entities are worthy of concentrating capital into. And the design looks a little bit like a butterfly or an old-fashioned bow tie, but is effectively a risk-managed basket of investments. And that structure, from those initial 1 million investments, the design is to do follow-on rounds of 4 million, which is 3 of equity and 1 of organized and thorough help and support. And then thereafter, the investments don't need to come with organized help and support over and above that we provide as a very nature of making the investment. So the investment management support. And then it's designed to invest at a level of 12 million, 30 million, 60 million, 120 million, and you guessed it, 360 million. So essentially, that structure means less investments get more capital through multiple stages, but you have the really critical discovery and essentially added value part early on. Now, you might wonder, what happens to those that don't receive follow-on investment in this structure? Well, those who don't receive follow-on investment, they might not be suitable for lots of reasons. Or they might not just be suitable for the fund, but they may be suitable for other investors that the bank helps arrange. It could be that their profile doesn't fit. It could be that their technology doesn't work, or the business model shows itself not to be really impactful, or indeed the people show themselves not to be right for whatever reason. But let's say there is a failure for the right reasons. That means we decline to provide follow-on investment and we can't raise additional investment from elsewhere, and there isn't a revenue stream that makes those businesses viable. Now that could be because the technology is carbon positive rather than carbon negative, or it's there's no path to profitability in the market that we operate, or it isn't delivering something that's really additional in terms of impacts. Well, if that's the case, we've spent money, we've invested to educate those people, and if they, those founders and teams, if they show themselves to have the right qualities, but maybe just the business model wasn't right, then the goal is to not just cast them aside, as often happens, but to work with them either on their follow-on idea, or indeed with other members of the portfolio, other portfolio companies that we might be able to place them with. So it's really designed to operate on a very human-centric level. Now, if people are toxic and really are very, very difficult and are showing themselves not to have the impact ambitions that we have, then of course we wouldn't make the follow-on investments anyway. But the whole point about this model is it's designed to take lots of risk level investments early on and essentially really get behind things that have high potential, but not necessarily all of the data or information or proof of concept or technology, but where the teams believe collectively that there is real promise there. And we recognize there will be many failures, but in the broader context of the fund, that's entirely okay. This design is to embrace, not reject, not avoid this level of discovery and impact. So it's really pretty exciting. I hope you agree. So by following on, essentially by providing follow-on investment to those deals, what we're able to do is have a slightly larger share of the equity portion. Now we will, of course, because the bank is designed to support this, we will raise co-investment where necessary. Of course, the founders and teams, they're still running those businesses up until the point that we are majority owners at some stage, which with this structure is a high probability, although it's not guaranteed. Many of them will go on to raise many billions of pounds or dollars in the follow-on investment market, and they potentially will IPO as well. But what we have the ability to do is find the ones that are truly scalable, generating both the combined structure of both high impacts and significant investment returns at the later stages. Now, by doing that, we can have entities in the portfolio that are steady, that are generating steady returns and having impact, those that are perhaps technology-based and have the ability for massive impact as well as very significant financial returns, and we have the ability to deliver things that are more modest as well. And with that structure, because it's designed to list, you have an awful lot of flexibility in how you manage the exits, because you don't need to take exits from all of the portfolio, it's an evergreen fund structure. So what it's designed to do is to raise additional capital, to take exits where necessary, or sometimes to hold things indefinitely if they're suitably cash generative. And that broad mix creates a really healthy evergreen investment structure. But I said there's three areas that the fund is designed to invest in. Just a quick recap, is designed to invest in the bank itself, is designed to invest in the special opportunities allocation into other fund structures or platforms, and it's designed to invest directly in all the themes and sub-themes of the SDGs and geographically spread around the world, but with entities that can also scale. This is truly important. And then the fourth area that it's designed to invest. Well, it's important to note that this fund structure isn't designed like a venture capital or a private equity style structure where it's a drawdown fund. You have investment commitments and you draw them down quarterly. It's what's called a 2 and 20 10-year fund structure. So a 2 and 20 10-year fund structure, typically the investments are made over the first 6 or 7 years and exits are made, and the idea is that all of the investments will be returned alongside the profit within a 10-year period. Sometimes that slips and it's 12 years or a little longer, but mostly it's a 10-year target fund structure. With that 2 and 20, essentially 2% of the assets under management go to pay the annual management fee for those who are running the fund, what's typically called the general partner. The investors in the fund are the limited partner, if you don't know that already. And the 20% is what's called the carried return. Used to be used apparently from whaling, and that would be the share of the profits that those who managed and manned the ship, including the captain, would carry off with them after their whaling trip. And that 2 and 20 structure has been in the venture environment for many a year now, 50 or so years since venture has been operational. Now, we're not going to do that. We will charge 2% of the assets under management. So in the case of Transform Global and the SDG 360 Game Changer Fund, 180 million a year when the fund closes at the 9 billion sterling. That will be the fees for managing the fund. Half will go to Transform Global and half will go to its subsidiary. And that's designed to cover all the costs associated with running something of such scale. So that's about 450 people inside the subsidiary and directly about 260, 70 people inside the investment bank. But it's also with a lot more people who are contracted in and who are working on a subcontract level, and significant budgets for things like property and technology and the marketing and other things that are required, including governance and compliance. So as I said, that's the fund structure, but the carried return, as is typical, that 20% carried return, that won't be a feature of this fund. The design is that the people who are managing the fund, all of the employees actually of the bank and all of the employees of its subsidiaries, they will be in line for what we call restricted impact options. And that is essentially, it's like stock options in a listed company or a startup that's designed to list or sell. But those stock options will have a difference. They're performance-based. That's what would normally be called restricted options. So there are targets for them. But in our case, the targets are really about not just financial performance, but the impacts that are generated. And those targets will be laid down and agreed with the foundation, and conditions for the people to receive those options are really tied to the collective impacts that are generated over a period of time. So we go back to the fund, and I said it would be investing in 3 and then an additional type of investment. So as we said, there's no carried return, But what we have, it's a liquid pool. It isn't a drawdown fund, as is the case of venture, where you have your investment commitments and you make your investments and you get your management fee and you draw down when you have new investments to be made, typically on a quarterly basis or as needed. With this, it's slightly different. The 9 billion is due to hit the account when the fund is closed. So we have technically a problem. That money, if it was sitting on deposit, it would be technically losing money with inflation, and it wouldn't be contributing. We'd essentially be just drawing down as we make the investments and only topping up from our exits. So essentially what we've designed and what we've realized is, as a very nature of that ecosystem, we can work with some of the top investment managers, and particularly the impact investment managers, this is all over the world, especially those who are really keen and desirous to generate significant impacts alongside their investment performance. An example might be someone like Chris Hahn of the Children's Investment Fund Foundation. Of course, he makes his money and essentially gives it away through his foundation. Well, we want to have a slightly different relationship with some of the top money managers in the world. We want to place our liquid balances with them, and as a result of the returns that they're able to generate, they're able to help us generate massive impacts through the combined entity. So essentially what happens is that those liquid balances, that's the fourth form of investment, placed through third parties, the contribution, the investment returns collectively they're able to make with very strong diversity and risk management, it means that we're able to keep on an evergreen basis building the strength of the fund. And those investment managers, many of which will be hedge fund structures or flexible structures, they get the incredible direct investment deal flow opportunity that we're able to generate. So they will have co-investment rights and many other benefits. So we think this is the way that this fund can operate. And by doing so, it can generate investment returns that are more than healthy. 8, 10, 12% is what we think the fund can generate. But what that can deliver in a listed vehicle is a pretty significant financial return, or a share price appreciation. Now, of course, there are no guarantees, but that's what we believe this can deliver at its base case. Now, when I say at its base case, none of that fund is designed to be leveraged, and the deals themselves, the investments, also are not designed to have debt. This is just equity. However, we believe it's possible we can add to the strength of the fund by adding a level of leverage either at a fund level or on a specific deal-by-deal basis. And if we're able to do that, then we're able to enhance the returns and of course, the impacts and the strength and scale of the fund. I'm not going to go into the specifics here on this casual discussion, but I do encourage you to take a look at the at-length presentation that explains how that will work and what the net asset values and what the annualized impact investments can be and the gross asset value, and you can turn that into the share price yourself. That's on the website transformglobal.co. You can see that on the comprehensive video or the segment which is titled Investment. Now, we've just talked about the 9 billion for the fund, but when the fund lists 2 to 4 years from launch, ideally, the goal is to raise another 5 billion at IPO. It could be slightly less and it could be a longer time horizon to list, but we think a 2 to 4 year time horizon of 5 billion of additional equity is more than possible. And that would mean the total assets under management for the fund would at that point be 14 billion, or the total capital. Of course, that would be adjusted based on the performance of those investments to that point, but essentially that's the total capital raised. And that means the fees for managing the fund would go up to 230 million a year, the personnel and the investment capacity would rise also accordingly. Now, I talked about raising additional capital for the bank. I talked about 4 billion. So bearing in mind, 360 million has come in from the fund, and the goal basically, so that would take a total of 500 million to that point for the bank. And the goal is then to raise another 1 billion at mezzanine, and then a 2.5 billion at IPO for Transform Global itself. So that would mean both the bank and the fund are separate but linked listed equity vehicles. And there is precedent for this happening previously. You could look at the relationships between SoftBank and some of its investments, or Yahoo and I believe SoftBank, or SoftBank and Alibaba, etc., and or Naspers and Tencent. So there are precedents where there are linked investment vehicles that are really closely integrated. What's different, I believe, with ours is the long-term governance. It's really designed to be fit for purpose. But what's the balance of that 4 billion going to be used for? Well, in order to build out, there are many boutique investment banks and media properties and technology entities that would really complement the operations of Transform Global and help us get to scale, raising investments for our subsidiary businesses, or fund level investments, helping raise co-investment or follow-on investment in the case of IPOs. So the goal really is to create a vehicle that has, importantly, that equity component and that listed component, so that we're able to issue stock in part for some of those acquisitions, which is all factored into the business plan, as well as that stock-based compensation and cash to part pay for those acquisitions or for those investments. So ultimately, this is designed really to create something that enables people all over the world with the focus on high impact investment to come together. Now, 18 billion is a drop in the bucket when we're looking at the scale of the Sustainable Development Goals. But actually what this structure means is we potentially can raise hundreds of billions, both through not just the SDG 360 Game Changer Fund, but it's mini funds that we would raise. This would probably be one of the largest, but the goal would be to raise other funds that have a similar structure, but not small. They have to be of a certain scale for them to work. And as I mentioned, through the special opportunities allocation, many other co-investments and investments into other fund structures and platforms and mechanisms that would include potentially blockchain-related solutions and technology, and potentially even crypto solutions. But we will not be trading crypto directly. There might be an opportunity to do that through the third-party managers, but certainly this is not about a structure that is trading cryptocurrencies. Potentially we'll invest in stable coins type structures or others. But really it's about delivering impact in all of the ways possible and in a way that truly can scale around the world. So what else is there to say? Yeah, I mean, when you look at the state of the world, we need to move trillions. And Mark Carney and many others talk about it's an order of magnitude. It is, but guess what? The existing banks and venture capital and private equity type fund structures and the multilaterals, they just on their own cannot deliver the risk capital in a way that is scalable and systemic. Now, the vision for Transform Global, as we've talked about, also includes our media properties. That's funding the globalgoals.tv and that's bigcrowd.net. Well, these are really important because the ability to create content, I mean compelling content, much more compelling than this, and interview some of the real names in impact investment to find out what they're doing, senior government officials and ministers, the heads of sovereign wealth funds, the people who are working to deliver impact and what is termed ESG, environmental and social governance, linked to the investments. We'll have the ability to ask both the exciting questions, the tough questions, and to showcase the kind of innovation that the world really, really needs. That's quite unique because it will also very publicly give us the ability to promote the bank. It is a part of the bank after all. So by the very nature of our interviewing the kind of people that we're talking about and publishing the content, we will get a significant audience of people who care about the impacts that are generated, and especially these critical issues, societal mission critical issues that have to be addressed. The goal, as I said, is blogs and interviews and news, long form content, short form content, event coverage, the event schedules, what's coming up, and really showcase the kind of activity that absolutely needs drawing together and isn't done currently in any media format. In addition, we have the ability to really make docu-style or documentary style content to show the progress of not just these fund and financial investments, but the entities on the ground that seek capital, and help them with understanding what they need to do, whether it's microfinance, infrastructure investment, impact investment, green bonds. I mean, the list is endless. We've identified at least 60 forms of content or forms of finance that need specific content, but also the kind of content that joins the dots. One of the challenges often, the language, the jargon that's used, even though sectors are very closely related, the jargon is kind of like speaking Chinese and French with 10 minutes practice time. It's really crazy how we have so many silos, how many funding gaps, and so many challenges that we're not effectively addressing. Well, this model of incorporating media into the model for a new World Bank but better, I hope you agree, can address some of those issues. But we also talk about bigcrowd.net. And bigcrowd.net is really about mass engagement, as well as a platform that can help us find high potential projects of all kinds. We call them big impact game changers. And our model is to create many prizes and awards that is designed to support them. With those prizes and awards, when I say many, they'll be worth 100,000 per month for 3 years for every one that we deliver, 100,000 sterling that is. So the value of those prizes and awards would be 3.6 million sterling for every one that this platform can deliver. And based upon a really exciting marketing component that's designed to get tens of millions of subscribers and incentivize those subscribers and give them amazing content and incredible experiences, and the ability to get content on their mobile phone, and essentially little incentives for how they subscribe, how they share and promote projects that they care about, and really support with active collaboration those game changers. The model really can deliver potentially thousands of such prizes and awards. How it works is half of the net subscription price, and it will be free and paying subscribers, but the paying subscribers who get the premium content and some other benefits, including the ability to earn, they will pay £9.60 a month, or £8 net anywhere in the world. Half of that net income will go in to pay for those prizes and awards. So every time there's 25,000 paying subscribers, that means we can pay for one award. And therefore we can set challenges around plastics or water or clean air. I mean, there's so many areas that we can set challenges and prizes accordingly linked to the SDGs, in conjunction with many NGOs and many others that want to tackle these issues, or we can deliver direct awards. Now, those big impact game changers, the recipients, they will be not-for-profits. They will be for-profit with purpose, which might be eligible for investment through the bank or its fund, or the Cornerstone Fund. They can be policy ideas even, or campaigns. So we're totally agnostic on what those game changers are, as long as they've got good governance in place or in process. They can be very bold startups or scale-ups, but they've got to have meaningful impact towards the SDGs or ambition for it, and the ability to scale. So why this is really exciting is because it's educational. Part of the process of Big Crowd is really about delivering content that inspires people and excites people. In short form, it will be 2 minutes, 3 minutes, as well as longer, a little bit like this video that you're watching now. And it's designed to be progressive. So it's not designed to be a one-off, it's designed to be there so people can follow these entities as they progress and as they deliver impacts, and how they cope with the peaks and the troughs, and how they get support from the bank and from the collaborators and from the crowd, or the big crowd, hence the name of the venture, Big Impact Game Changers and the Crowd. That's the name, bigcrowd.net. So that structure, that platform, the viral nature that will enable the subscribers to come on board, it has to be pump primed, and it needs investment. So going right full circle to the discussion right at the start, how much are we raising? Well, from that initial 2.35 million, we'll get the tech build for Big Crowd started, and some game changers onboarded that we already know. That can happen pretty quickly, but for the actual launch and the subscription sale, we need to get the tech and especially the payment structure really organized. So it will have quite a little bit more investment that it requires. But because a big part of it is pump priming and the marketing to get the subscriber marketing kicked off, the goal basically is through those first stages of funding. So that's the first 2.35 and then the 40 of equity, potentially with the technology grant as well. But the 2.35 and the 40, and then the follow-on investments from that, essentially 42.35. 5 million is allocated to Big Crowd, and 5 million is allocated to funding the global goals.tv, with the balance allocated to aspects related to launching the bank and raising the follow-on funds. But through those follow-on raises, so the follow-on 90 million, a further 20 million will be allocated to each of funding the global goals.tv and to bigcrowd.net. And then when the 360 million is raised, that's the investment that comes on the close of raising the 9 billion impact fund, a further 90 million will go to both Big Crowd and to funding the global goals.tv. So basically what we're saying is around about, well, exactly 230 million pounds out of that 4 billion, or sorry, out of the initial 500 million, will be allocated to funding the global goals.tv and to bigcrowd.net. Now that's a reasonable amount of money, and that is designed to fund their operations for 2 to 3 years. Frankly, Big Crowd on its own, it's got a revenue target of about 4 to 5 billion sterling. Actually, it's close on 5 billion sterling over a 6-7 year period, and it can be quite profitable in its own right. From the £8 subscriber revenue, half goes to the game-changing project, so essentially it's donated, and the other half is our margin, our marketing, our technology, and our commissions to the subscribers and to the ecosystem. So when you work it all out, that business alone has the ability, we believe, to generate several billion pounds in value, because of its net profitability, potentially 10 billion or more in a 6, 7, 8 year period. And frankly, if my hunch is correct, this could be a real powerhouse of the social impact network sort of movement, getting a community built all over the world. Now, what's exciting about that is it delivers deal flow for the bank, for the fund, and for the broader ecosystem. And part of our model, talking about that ecosystem, so with Big Crowd, we mentioned the prize is 100,000 sterling a month for 3 years, Well, actually, the prize is 20,000 of cash, 10,000 to be spent on governance and impact reporting, and £70,000 will be spent on high impact added value help and support in roughly 12 areas, and they are everything including talent support, recruitment, social media, storytelling, video production, strategy, technology, legal, accounting. Especially we'll be doing a lot of events to showcase the game changers and of course make sure that they are above what Peter Diamandis calls the line of super credibility. So that model, the £70,000 per month for every prize that we deliver, some of that will be spent in-house with cross-functional teams that we bring on board who have got core competence. But in addition, what we'll be doing is working with those game changers because the prizes or awards, they're tailored to the needs of the game changer. And the goal is to make sure they're fully funded, that they are totally operational and scalable, or scaling if they're already operational when we support them, and funded to the extent that they can deliver maximum impact. But let's say that happens inside 6 months of launching. Well, would we still deliver the prize? Well, yes, we would, because the goal is to provide ongoing governance to really fill the gaps that they're not filling in, to get them to a point of maturity, but especially to show the crowd, the subscribers who want to support them, potentially want to engage with them and buy their products and services if they're ethical and ideally suited for what we're doing, or potentially work for them. So we want to make sure that the ongoing content production is certainly for the first 3 years of our support and potentially thereafter, but funded through whatever investment they raise. And at that point, that prize would then be reallocated to another entity in the broader ecosystem. So I've covered quite a lot of detail here. I will stop for now, but other than to say this is a massive opportunity. And it's a big opportunity. For some, that scale might be scary, but for others, it's truly exciting. Now, frankly, that first 2.35 and that follow-on equity, that's where the risks are. We recognize that. And that's why the terms are really quite attractive for that first 2.35 million sterling. And it's designed to make sure that people, the investors and supporters, impact investors, get to do very well and do very good. And at the minimum, they come away with a healthy return. Now, of course, there is risk. But if we are able to do this and do it at the scale we think we can, and of course, the more we can build that community, the more easy it will be able to be. And I've been able to do that to an extent on Clubhouse for the last 6 months, getting over 4,000 followers to myself and another 3.6, some of them overlapping, to my club, fundingtheglobalgoals.tv, where I do my room 3 times a week. So the whole point is the momentum is building, and the more the momentum can build, the lower the risk can be. However, you know, I have to flag it's still a risk investment. But the upside, I think, is pretty important. The upside is we could change the world together. This is an entity that I believe the world really needs, but I can't do it alone. I need the operational team. I need, of course, the budgets to put in place what we need to do, both on the technology and the media side, and the momentum and the marketing, to really get truly caring people and those who really want to address the Sustainable Development Goals, to make them aware of this model, both in short form, in long form, and with those who are part of this ecosystem, how they can see not just Steve, they can see the team, they can see the ecosystem, and they can see the excitement. So I do urge you, if you know people who could be investors in that 2.35 million, please put them in touch. If you already know me, I ask that you do that quickly. We want to be out of the gate really by later this year, when the climate talks, the COP26 is happening in the United Kingdom. But I want to say that what I've done is I've structured for that early investment a really exciting introducer package, so that those who are investing or introducing the first 50,000, the first 300,000, and the first 2 million of that 2.35 million, they will get essentially a differential package of introducer shares. There will be no payment for raising or introducing that equity, but they will get introducer shares that I believe could be pretty worthwhile over a period of time. That positions for everything we need to go into the next stages. So I encourage you to really dig deep in your time and your contact base to make sure people who want to know about something like this know about it. They can see this video, and if you're watching for the first time, welcome. And I really do encourage you to reach out and join one of the Zoom calls that we've got coming up. So I encourage you to join the Zoom calls to learn more. You'll have heard some of what we've talked about, but you'll get to see some of the slides as well, and some of the numbers, but especially you'll be able to ask questions directly about the team, about the structure, the governance structure, about the technology, about the investments that the fund could make, the bank will make, the SDG 360 Game Changer Fund, how it is structured, what kind of talent that we require. You can learn about fundingtheglobalgoals.tv, you can learn about bigcrowd.net, you can learn about the organizational design, because that's critical to have high talent density for this kind of systemic operation. We need incredible people, and we need to educate them quickly and effectively and make sure that they are performing according to the impacts and to the ethics that we're setting this up to have. Now, you may know that I've got a pretty big network already, and you might want to know, why is the team not operational yet? Well, with something like this, I passionately believe it needs to have its initial funding and the structure so that you can recruit and operationalize that team from a real position of strength. So I do encourage you, get behind, watch this again and again, or the other content that you can find on fundingtheglobalgoals.tv or bigcrowd.net, or join me on Clubhouse. You'll see the link, and you'll be able to find the link in the YouTube video introduction, or on my link tree, or on any of my sites. Come and join me on Clubhouse for the discussion, or indeed join me in the Zoom calls that are coming up. So thanks a lot. I really do appreciate you watching this video. I didn't intend it to be quite so long, but in the terms of Mark Twain, I was going to write you a short note, but I didn't have the time. Yeah, I mean, the edit is everything. So our content producers and media people will need to give me some training and support to make sure we can get these messages down really tight. But actually, you'll be able to see some of those right now as well, because some of those highlights will be explained and are already on the website. But of course, we have to make this more professional, more accessible for different parties. But hopefully, it's made some sense already. And if you feel you'd like to become involved and to help us create a new World Bank but better, just reach out. Anyway, thanks for watching.